Well, it's the beginning of another trading week right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you might be watching from. It's Business Morning coming to you live from Channels HQ right here in Lagos, Nigeria. Let's get the top stories that set your agenda now. See, oil prices rose nearly 1% in early Asian trade today, supported by lower exports from Russia and as attacks by the Houthis on ships in the Red Sea raised concerns of oil supply disruption. Brent crude futures climbed about 69 cents to $77.24 a barrel, still below the $80 level at this time, while US WTI crude was trading at $72.08 a barrel, up 65 cents. Russia said on Sunday it would deepen oil export cuts in December by potentially 50,000 barrels per day or more, earlier than promised, as the world's biggest exporters try to support global oil prices. Well, definitely expecting a lot of volatility in the oil market this week. Let's get a check on the grains market now. Chicago Board of Trade soybean futures gained for the week. Last week, we see the CBOT March wheat futures, WH24 finished about 1% lower in the week and ended December 12, but they'd been up as much as 3% on huge trading volumes early in that period. The most active CBOT corn CV1 shed about 1% in the week ended. But short covering, likely in sympathy with wheat, turned funds into net buyers. We see money managers have trimmed their net shorts in CBOT corn futures and options for about 151,000 contracts from 160,000 contracts a week earlier. And the executive board of the International Monetary Fund has agreed to temporarily raise the Poverty Reduction and Growth Trust, PRGT, normal annual access limit to 200% of quota, and a normal cumulative access limit to 600% of quota until end of 2024. These changes are intended to better support the fund's low-income members in a particularly challenging and uncertain global economic environment. The Poverty Reduction and Growth Trust is the fund's concessional lending arm, currently at about 0% interest rates. In March 2023, the IMF Executive Board decided that an interim review of the PRGT access limits should be carried out once substantial progress with the PRGT first stage fundraising target for subsidy resources of SDR, about 2.3 billion SDR, was met. IMF's concessional lending under the PRGT is subject to normal annual and cumulative access limits. PRGT access limits were last reviewed in July 2021, setting the normal annual and cumulative access limits at 145 and 435% of quota, respectively, aligned with then prevailing general resources accounts. That's the GRA access limits. And back at the federal government borrowed about 10 trillion to finance the 2023 budget, with about 8 trillion raised from the domestic market. And that's according to the Director General of the Debt Management Office, Mrs. Patience Oniha. With about 9 trillion naira deficits in the 2024 budget, Ms. Oniha says the federal government will once again depend heavily on the domestic market. Take a listen.
This year there's about 8 trillion or thereabout of new borrowing as well. In the domestic market, there's still liquidity, there's still some robustness around it. Don't forget we have a very active fixed income securities market. So this year, for instance, we have raised 7 trillion naira, which is the full amount provided in the 2023 Appropriation Act. So achieving the same next year should not be difficult. I didn't say it to be all smooth or all easy, but to the extent that we keep offering products that investors want, by that I mean tenors, product variety, so there's Sukuk, there's, if you want the FGN bond or treasury bills, that is there. But also that we have an investor base that is also growing. Your banks are growing, your insurance companies are growing, your pension funds are growing, other asset managers are growing. So if you put that together, there's optimism.
As Nigeria thrives to be an export-driven economy, tackling the issue of harsh business environments is dominating our conversations right now. And recently, at the Corporate Assembly in Lagos, the state government and the business community met to discuss issues in driving the state economy. Well, join us now to discuss further is Mrs. Folashade Ambrose Medebem, Honorable Commissioner for Commerce, Cooperatives, Trade and Investment in Lagos State. Joining us right here in the studio. Great to have you. Good morning.
Good morning. Thank you for having me.
Yeah, so it's all about ease of doing business at this time, because definitely in a harsh environment, it's hard to, establish businesses, make profit, at the same time, trying to employ people. So much, to tackle at this time. But earlier this month, we know the Lagos State Governor met with, the business community.
Yes, it is.
And a lot was said. A lot of issues, were brought up about doing business in Lagos. Give me your key takeaways. What were the issues with, the business communities?
Okay, so this was an annual event. It's the annual Corporate Assembly event, and it essentially is Mr. Governor's way of demonstrating his unwavering commitment to ensuring that he's driving a conducive business environment across the state. And this year's format was tweaked a little bit. And when I say tweaked in a proactive way, right, whereby we actually had already started to feel the pulse of a number of the business community stakeholders to understand what are their key core issues. So we had a number of presentations this time. And for instance, we had the chairman, the LIRS chairman, Mr. Subar, come and give a presentation on the sort of dispelling the myths of multiple taxation. And as part of his presentation, he was able to clarify categorically the distinction between fees, levies and taxes. And with that, it became clearer that there was a distinction between all those categories. And obviously, when we also talk about taxation, LIRS is obviously to do with Lagos State. And then you have the federal tax as well, which we all know Mr. Taiwo Oyedele is addressing in terms of trying to harmonize all the tax, etc., in terms of those fiscal policies and unifying the taxes, etc. Further presentations also alluded to the ease of doing business, again, a huge pain point, and I clearly understand a topic here. And under my ministry, it's clearly important that that's one of the key deliverables we're going to be sharing in Q1 next year. So we invited Veraki, who came and gave a presentation, here, the people I'm working with, in terms of trying to understand how Lagos government to business connect can work in a much more seamless, efficient way, whereby in the past, where there's different multiple interfaces across Lagos State, the intention is to try and make sure there's one single source in terms of their interactions, in terms of their questions, in terms of addressing a number of, to do with permits, to do with licenses, to even understanding, taxes, etc., and really shifting from that silo to a multi-interface to an integrated one-stop shop. So a presentation was delivered on that, and it was very clear that improving transparency and ensuring that we're increasing, the overall easy access to government services was very, very clear. Various other issues were also discussed and resolved categorically on the spot. In attendance was, as just to demonstrate, was Mr. Governor, Mr. Deputy Governor, the entire EXCO, SSG, and key other directors of agencies. And so a number of the pain points were addressed there and then. Another good thing that came out of that, and it was unprecedented, was that Mr. Governor, when we started to understand and listen, when he started to listen to a number of the other questions, it emerged that some of them were actually from a federal standpoint. So he's actually pledged and stated that we're going to have an unprecedented corporate assembly in Q1 next year, whereby we will be inviting a number of the key federal agencies, such as the CBN, the tax authorities, Standard Organization of Nigeria, NAFDAC, etc., etc. So again, this just demonstrates how important
But
this is.
from everything that was said,
Yes.
Definitely, 2023 was a tough year for businesses.
Yes.
Putting aside, the macros, the macro issues, from rising inflation, squeeze, consumer demand, at this time. But looking at, everything that was discussed, for 2023, seeing the business environment, in your opinion, how hard was it for businesses?
Well, I don't think I can say this without encompassing the whole world, global world,
Right.
in terms of, the realities of doing business. It's tough, as we know, all around the world, including here in Nigeria, and it's important that businesses are able to adapt. And that's where emergent strategies come across and emerge, where they're actually going to review and revise their operating models to make sure that they're actually operating in an optimal way. So it's down to leadership, it's down to them ensure that they're interrogating their numbers adequately and making sure that they're being agile enough to adjust themselves according to the macroeconomic situations on the ground.
Yeah, definitely a lot of issues. And we've seen, big multinationals that have been in Nigeria doing business, for many years. We've seen a lot of exits, at this time. And it's not the usual kind of exits, you get, maybe when a company is being profitable as a venture capitalist and you make your exit. But this time, they're leaving the country because of the harsh, business environment. How's the state looking at this issue?
Okay, so look, I just alluded to it earlier. Businesses are indeed exiting. Businesses are sort of revising how they operate their businesses. Lagos State is still the preferred destination in terms of investment, in terms of a number of organizations coming to set up business in Lagos. And to validate that fact, GAC Motors just assembled 2,000 cars and delivered that on their assembly line. We have a number of investors. Obviously, as you know, my ministry now has investment under its umbrella. And so again, I'm speaking to a number of investors who are very, very interested in coming. And we have a waste management company that's going to be setting up very soon in Q1 in Lagos State. So again, as some are exiting, I think it was last week, I was just at the Unilever 100 years. They celebrated of doing business in Lagos and indeed Nigeria. So as you can see, there's always, two sides to every equation. And the realities of doing business are macroeconomic.
But I'm sure the state is worried about the ones that are exiting. Look, at this time.
Like I said earlier, business is business. Everyone has to be agile enough. We all understand the sort of pros and cons of doing business, and it's important that businesses adapt and making sure that they're agile enough to take the necessary decisions they're taking. So as I mentioned, some are actually exiting, some are actually coming. It's realities of doing business around the world. What
about addressing the concerns or the issues making some of these companies actually leave?
Well, you heard what I said earlier in terms of alluding to ensuring that we have an unprecedented corporate assembly in Q1 to address some of these key issues. And that's why we're bringing in some of the key stakeholders at federal level to come and address those. Because if you think about it, Lagos State represents, the fifth largest African economy. In terms of our GDP, we're representing at least 30% across Nigeria. And so it's important that we have that importance to bring those key stakeholders down because of the importance of Lagos State to address those discussions. So that's one thing.
You did mention that Lagos State was still the preferred, destination at this time. We did get data for Q2 2023. Capital importation about $778 million. Lagos State accounted for about 75%, of that, followed by Abuja, $194.28 million. So I'm wondering, is the state satisfied with these numbers?
Well, the state is incredibly satisfied, but we're also very audacious in terms of making sure that we achieve more come Q1, in fact, the entire 2024. So a number of steps are being taken to try and address that, hence why we had the investment roadshow in terms of going out and taking Lagos to the global community for the very first time. In 800 years, I'm sure you saw that. We were invited by the mayor of the City of London, and that was unprecedented, and that was a big deal. Because not only were we the first subnational country to attend, or state to attend, we were also the first African to be invited in over 800 years. And as a result of that, we interfaced, obviously, post the actual float celebration, which highlighted our rich culture and heritage. But we also had very, very important discussions with key stakeholders across the city, outlining core areas of infrastructure investment needed, what we've done, what we intend to do, and the fact that Lagos State is a growing environment, and it's very exciting for them to come down here to invest.
And coming down here to invest, and your participation at the roadshow, the Lord Mayor London show. So, what did you bring back for
What did we bring back?
For Lagosians or Nigerians at large?
For Nigerians, we brought back an enhanced global reputation. That Lagos State is indeed open for business. We brought back strengthened relationships with key stakeholders globally. We brought back the fact that in Nigeria and indeed in Lagos, we have able lawyers, we have able accountants, we have able consultants and stakeholders open to doing business at a world-class level. And that was something that was very strongly stated. Mr. Governor appeared on the local international news line there and demonstrated that. And again, we also have a deal book which we've prepared in my ministry, and we've outlined the key sectors in where the investments are going to be done. And again, just coming to Lagos, you can see that a lot of opportunities are abound. Lagos,
I guess we're making it the land of opportunities at some point, Lagos State.
Yes, it is.
All right, so definitely a lot of African countries, major economies are talking about AFCFTA,
yes,
at this time. And we're all trying to position, from being a consumer nation, or being consumer nations to, producer nations. Talk to me about, what Lagos State is doing to support, businesses, MSMEs, to compete.
Okay, so we actually just recently concluded our 5-day MSME exclusive trade fair, and the theme and the focus of it was empowering SMEs to really leverage after. And one of the key things that involved was really about Lagos driving infrastructure development and really training and empowering the MSMEs for them to be globally competitive, and really for us to leverage the opportunities, because we think about after, I think there's about 43 parties and 11 signatories, and it's really optimal that Lagos State ensures that our MSMEs are really set up for success. So we had business clinics, and I'm talking of over hundreds and hundreds of people attending over the 5 days. We had capacity building workshops, we had the trade fairs which we provided, and we made sure that they really understood, and you can speak to a number of them, were incredibly happy with that. And that's something that we will continue to do. And we actually did it bigger and better in terms of numbers, in terms of capacities, and in terms of bringing key speakers to come and speak. So we had the Bank of Industry, we had NAFDAC, we had a number of key speakers to come and really help with driving their capacity building. Because at the end of the day, we need to really make sure that we're out there and playing a really impactful part.
Right, and these businesses definitely need access, to finance. And, when it comes to doing business in Nigeria,
yes,
as a whole, there's a serious issue, when it comes to power. At the end of the day, some say that, if we solve the power issue, if, businesses have access to about 20 hours a day of power, then things will get really easier, for this business. How's Lagos State looking at this part? Because now we can generate our own power.
Yes, and what we're doing from an MSC standpoint, for instance, we have industrial hubs, we have enterprise zones, and the whole essence of that is to help a number of these MSAs to actually operate in a sort of affordable, efficient way. And so trying for them to sort of aggregate what they use. It's almost like a pay-as-you-go. You come in, you use it. It's like an incubator hub. You come in, use the facilities, and then you go. So that allows them to be able to operate. Obviously, we have a Ministry of Power, and we've just, as you noticed, Mr. Governor has just sworn in the new Honourable Commissioner for Power and Energy, highlighting how important it is. So I'm pretty sure a lot of outputs and updates from that standpoint will be emerging. But yes, it's being addressed, and I certainly am making sure that I'm addressing that. And I mentioned earlier, we have a number of investors also coming, trying to see how we can leverage renewable energy, clean energy, to really make sure it's affordable and impacting businesses in a positive way.
Definitely. I guess we're all looking forward to the Lagos of our dreams, going forward. Thank you so much. It was great having you, Mrs. Folashade Ambrose Medebem, Commissioner for Commerce, Cooperatives, Trade and Investment, Lagos. It was great having you. Thank you so much for coming.
Thank you very much. Thank you.
All right, so after the break, we'll get a sense of how investors fared in 2023. That's our next conversation. Do stay with us. This is Business Morning. welcome back. Well, coming from 2022, many described it as a challenging year for retail and institutional investors. Coming into 2023, interest rates were already on the rise. Inflation was at all-time highs in most economies. And 2023, as it comes to an end, now let's take stock of how investors fared and get an outlook for 2024. Joining us for this conversation is Mr. Ayodeji Ebo, MD, Optimus by Afrinvest, joining me via Zoom. Great to have you on the show. Good morning.
Yeah, good morning, laddie. It's great to be here.
Fantastic. So I remember in 2022, coming into 2023, most investment advisors expected investors would stay away from the equities market, with 2023, being an election year. But the NGX All-Share Index is up over 40% year to date. Help us understand this dynamic.
Okay, thank you very much. If we cast our mind back, we would recall that coming into 2024 was an election year, and the election was really very keenly contested. And as a result, that impacted on the expectation of the investors. So we saw significant sell down on most of the stocks, and the stock market last year was really down. But we saw that one of the critical factors that we know that have improved the performance of participation in the market is also the smooth transition. Yes, there are a lot of controversies, but having a smooth transition to another regime was really very important. And some of the major announcements that came in early, like the removal of fuel subsidy, immediately impacted on the oil and gas sector. Yes, there's a bit of reversal in that space now. Also, on the FX policy, also boosts a lot of confidence. Yes, they are also concerned in that space. But when you look at it holistically, there was a bit of repositioning of the equities market based on policy announcements, based on policy decisions. And it's good to also put it into perspective that the retail investors continue to be the major drivers. Based on the NSC data as of September, the retail or the domestic investors rather accounted for about 90.5% of total activity relative to foreign investors. And when you also break that down, when you look at the retail investor, invested almost about 850 billion relative to about 500 billion last year. That is still as of September, which means they may double that. That's 2x. You also look at the domestic institutional investors, also invested about 1.6 trillion so far as of September relative to 1 trillion last year. So that strength or that renewed interest from retail investors sustained that bull run that we're seeing. And that is responsible for the performances that we're seeing in the equities market. It's good to note that the foreign investors are still staying on the sideline relative to about 160 billion naira traded last year. They've only traded just about 108 billion naira this year as of September. So which means that the policies or the confidence is only rubbing off on domestic investors, but the foreign investors are still staying on the sideline, maybe given some of the uncertainty around the FX environment.
All right, Mr. Ebo, but if you put up that slide for me again, looking at how the NGX All-Share Index has grown, if you put up that slide, if you look at the January, when we started trading for the year 2023, we see we're at 51,222 points. But if you run down to June, you see that that's where the action started. We got about 60,968 points for the All-Share Index. Can we just say this rally was driven, or was an election rally, or Tinubu as some have described it?
Yes, we can say, yeah, you are right. We can say it's the President Tinubu's effect. Given some of the immediate policies, you would know that some of those immediate announcements set a bit of strong pace and confidence in the economy at the beginning. So that was also responsible. And you also look at how some of those policies in terms of the movement in FX had also impacted on the banks. Yes, it was is two ways. For some of the manufacturing sector, you see a lot of them shareholders fund underwater, but for the banking sector, they were able to book a lot of FX gains, which was a major boost, and that is part of what is responsible for the gains we are seeing in the banking sector. You look at it year to date, they gained close to about 60%. Some stocks have gained over 120% in the last year. So policy is key. Performance, financial performance, these are variables or factors that drive performances on the stock exchange.
And looking at the macros now, we got that hot inflation data on Friday, seeing that inflation hit multi-decade high of 28.20%. We're also seeing currency devaluation. The naira is pressured, at this time. Which investors would you say were able to manage, in 2023? Look at the official numbers there for the exchange rates, 458 all the way to 896. Now, I did touch about 1,000 in the official market. Which investors were able to beat inflation and currency devaluation in 2023?
Okay, thank you. The first, if we're going to rank them, I would say for the equity investors, for those that were able to take the risk or benefited from it, the banking sector gained close to 60%. You look at the oil and gas sector, gained over 100%. That's oil and gas sector index has gained over 100%. And so, for those that are invested in the equities markets earlier this year, would be the winner based on asset class. Then you come down to the for those that are invested in dollar-denominated assets, which was one of our strong recommendations earlier this year. So you would see based on you spoke about the official market, but it's not until recently most investors access dollar through the unofficial market to invest. And looking at that, it opened about 776 naira to a dollar this year, and currently at 1,230 naira to a dollar, which is about 40% depreciation. That's when you look at that, that would translate into about close to about 70% improvement in their investment. So that's also positive for them. And for those that are less risk averse, we would see that for those that were able to invest more in commercial paper, would have also tried to bridge that impact of inflation, like you mentioned earlier. Inflation based on the last report at 28.2%. So for investors that were willing to invest in CPs, commercial papers, so would have still benefited rather than staying with treasury bills, which we know is government backed. So by and large, I think investors, those that are willing to invest or take a bit of risk this year, benefited from their actions rather than leaving the funds idle in their bank accounts.
Talking about the naira's weakness to the dollar and dollar-denominated assets at this time, we're all trying to relieve pressure on the naira at this point. Do you think this dollar-denominated assets also put some kind of pressure on the naira?
Okay, thanks. I think that what we saw, yes, we may say might have put some pressure on the naira. You are correct. However, you should also agree that you would also agree with me that it's important that investors also try to diversify their investments. If you exclude the investors, the amount of investments from the total activity, you will still see that it will not solve our problem. So the focus here is for retail investors that were willing to also invest in dollars, were able to hedge, because it's important. You see, the purchasing power continually erodes if you are unable to provide a bit of hedging for your investment or for your savings. So I won't say it actually impacted on it. One of the major factors that impacted on our FX this year is oil theft, which is a macro issue. So there was a reduction in the supply of FX, and as a result, CBN had to reduce supply. So I wouldn't link it to participation of retail investors in investment, in dollar investment.
Right. All right, Mr. Ebro, everyone's looking into 2024 now. I'm sure investors are trying to find out where to put their money going into 2024. How do you advise investors should position, at this time to get an efficient portfolio going into 2024?
Okay, thanks. And whatever portfolio I'm going to also give now varies because investment objective differ, the risk appetite also differ. But when we look at just on the average or on the balance of factors, fixed income will still carry the day. So speaking to retail investors, first of all, fixed income, try to shift more to commercial paper. You see commercial paper issued about close to a trillion this year. And we also saw that more funding for the manufacturing sector, followed by financial services. So we believe that there should be continued interest in commercial paper. If you do about 20-30%, then you can also look at FGM bonds, which they are all fixed income. Dollar denominated asset will also, you need to also have investment spread there, maybe about 20% of your investment, because a lot of Nigerians also have dollar obligations. So for matching, you can't be saving in naira to fund your dollar obligation. So you need to have investment in dollars. Then equities, while we've seen significant rise in some of the stocks, this will only be for long-term investors. We don't expect that there will be significant return as we saw in 2023, in 2024. So it means that there should be less investment. We should be less cautious in investing in the equities market. While we expect, yes, performances may still be positive, but there should be a bit of caution in investing for short-term investors. And lastly, alternatives, which will involve real estate. We believe with the stability we are seeing in the economy, yes, consumer wallets are currently being squeezed. But for those that are really exposed to low-cost housing, we believe that within that space, there will continue to be availability of opportunities within that space. So by and large, if you look at, you need to be properly diversified. You need to understand your risk. But it's important that you don't leave idle funds, because that's also what really affects Nigeria. Looking at inflation rates, if you have left 1 million naira in the last 1 year in your bank account, you would have lost about 280,000 naira. That means the ability of what it can buy will be just about 770,000 naira. So it's important that you don't leave any idle funds. Look for opportunity to continue to earn return on your investment.
Right. No idle funds. I guess you can say idle funds are the devil's workshop. No, I don't know if that works for for that, but I guess don't stay in cash at this point. Thank you so much. It was great having you, Mr. Odeji Ebro, MD, Optimus by Afrinvest. Thank you so much.
Yeah, thanks for having me, and have a great day.
You too. And talking about investments, we have Will to give us the details for fixed income markets and a review of what happened last week. And Will, definitely coming into 2023, the fears were high.
2023 or 2024?
I'm talking about coming into 2023 from 2022.
Okay, great.
Everyone said it was risk off.
True.
Risk off sentiment with central bankers raising rates. So I'm wondering, Will, were you able to beat inflation in 2023 and currency devaluation?
Of course, Laddie.
You
know,
did?
if you're able to, look at the right markets, I'm sure you'll be able to know where to position and to be able to say.
So there you have it. Will beat inflation.
Oh yes, I always beat inflation.
In 2023. Incredible.
But we all did feel that pinch. When you go to the markets, as in definitely, you did know that purchasing power is really, really low because you couldn't afford the things.
So you were defeated at the markets.
Oh yeah, when you eventually go there and you're like, oh no, how do I beat this? But you think you could get away with, the idle funds as a devil's workshop?
No,
like, where did you coin that from?
Yeah, I just had to coin it because he says no idle funds.
No idle funds.
No idle funds.
Yeah,
they will lose value.
Of course. That was really impressive anyways. We did see the equities market really performing very well. And as you said, it's made some stocks has made like the oil and gas made like over 100% returns this year. We're seeing the fantastic run. And I will say sentiments basically were run, on the back of the election and the policies that the government, put in place or said they're going to do. But we'll only wait to see. You said we should trade with caution in 2024, but it's going to profit only the long-term investors and not short-term traders.
Right.
But let's just see how that plays out. We did get we did get those projections you did say from 2023. Let's see how 2024 pans out for investors.
Wait and see.
But we're going to kick off with the fixed income space, particularly with the FX reserves. We saw that declining further last week. We saw that gross reserves level dropping by $10.95 million week on week to close at $32.85 billion. That's as of December the 13th. Now, meanwhile, the Naira appreciated, average by 23.5% to 889 Naira, 86 kobo to $1 at the Nigerian Autonomous Foreign Exchange Market, that's NAFEM. But when we look at the total transactions and the FX turnover from the FMDQ exchange, we did see that 1.55% jump to 566.51 million naira. FX spot, that's the INE, we know that's the NAFEM. We did see that in total transactions, we saw 2.1% uptick. It closed at $563.3 million. And then we're just looking at the forwards. We saw that downtick there for the 7.46% down to close at $3.21 million. And then declared USD Nigerian non-deliverable funds with nothing happened there. But let's look at the bond space. It's sustained bullish sentiment. Yields are still dropping there. Investors are probably seeking to cover the lost base from Monday's auctions. And we've seen the average yield in the bond space contracting by 48 basis points to 14.4%. Now we're also seeing bullish sentiment in the Treasury bills market. Yields are also dropping down. But we're bringing in Ladi Bello, is the fixed income dealer at Access Bank, to give us what to expect, especially with higher inflation beating expectations. And we want to know what the outlook for the market will be in 2024. Good morning, Ladi. It's good to have you on the program.
Hi, good morning, Will. Thank you for having me.
Ladi, we did see that inflation coming on Friday, higher than expected. Most economists had projected possibly a 27.9% uptick, but we got 28.2%. Now, looking at the fixed income space, and we're seeing that yields are going down. Do you think that, the next MPC meeting, we're going to get a push-up, an increase in interest rates? And would that be able to help investors make returns, at least get return for their money, especially now that we're saying no idle cash should be left in the bank?
I absolutely agree with you. As you rightfully mentioned, we saw inflation trend up by an average of 87 basis points from the 27.33% levels that we had the previous month. Now we're currently 28.2%. And I actually don't see this trend reversing anytime soon. I think we'll see the base effect kick in at about Q3 2024. And as a result, I would expect at the next MPC for the CBN governor and other members of the quorum that were just recently formed to adjust the NPR rate upward again to combat the inflation that we're witnessing in the market, which is generally driven by food prices, which is what we're seeing in the market at the moment. Previously, the NPR was 18.5%. We went up by another 25 basis points. So we're currently at 18.75%. And I see a little bit more room to get to about the 19.5%. So I expect a bit of an increment when the next MPC is conducted. As you're aware, we had the MPC pushed back twice now, and we're waiting for the next meeting to be announced by the head of the Apex Bank.
Okay, let's have a quick recap. We're in the penultimate session for trading the fixed income market in any of the markets, before the end of the year. What do you see? How would you, rate the performance this month for fixed income, and what do you expect the market? What's the outlook for 2024?
Right. So the market has been relatively active when you compare it to the preceding months. We've seen the T-bills gain most of the interest, with subscriptions hitting above the 1 trillion mark consistently across the 91, 182, and 364-day offerings. We've seen most of the interest skewed towards the 1-year paper, where yields just a couple of weeks ago were trending around the 16% mark. Now it has come down a little bit given the aggressive demand that we've seen over the last 2 auctions, but by and large, we're going to continue to see this sentiment as the coupon payments continue to flow in, as well as the FACT disbursements, which has just recently been approved by the federal government. So I see a bit more room for a rally. We expect markets to trend down at least another 100 basis points before the year runs out. The secondary market, which was trading at around the 12.5% mark just a week ago, has broken that mark. So we're now very close to the 11.5% handle on the long end of the curve. We're not seeing, we saw a lot of profit takers on Friday, so we saw a bit of an uptick in yields, but by and large, we still expect the trajectory to be downwards. But going into this week, we will see a bit more interest on the bond space as we get more clarity from the debt management office in terms of what would be offered on the calendar for the year 2024. And that would generally dictate the pace of the market. Also, one of the important pieces of information that we're looking forward to will be essentially when the MPC will be floated, again, which would give the market some sense of direction going forward.
Definitely, we'll wait to see that calendar and then the MPC meeting, the much awaited MPC meeting, to give a clear direction as to where the market will be going, how people should position investors and potential investors and existing investors who just have to retain. Thank you so much, Ladi Bello, fixed income dealer, Access Bank, for joining us this morning. So we'll just go ahead to the other markets. The NGX closed positive last week. We saw the L-share index rising by 1.18% to 72,389.23 points. Equity cap, so market cap is still at 39.61 trillion naira. Very good for the market. Investors bought a lot of banking stocks. Last week we see the market recording a total turnover of about 1.88 billion naira in shares. Now look at that very quickly. The total turnover and the chart was about what, and it was worth 31.63 billion naira. Then looking at the rates at which the market moved, yeah, that's it on the board. We have 33,020 deals from last week. That's a lot for the market, and then we see that volume, but it wasn't the red, but it's still a big push for the market. We did see that pressure on the buy side and also see the sell side pressure. Looking at the banking sector, I did mention that investors traded a lot of banking stocks, and it was up last week 7.01%. Consumer goods also followed suit. Not so, up, but it's up regardless. Industrial is also up 0.24%. The only downers are the insurance and oil and gas sectors. But we'll wait and see if there's going to be a turnaround where investors are going to think, oh, maybe the banking, maybe the oil and gas and insurance sectors are going to be a win this week. What do you think, Ladi?
Well, definitely, if you're going to be doing the counter trade, at this point, trying to take on the counters that didn't do well, the laggards, and maybe they'll do well next time. Maybe that might help, but definitely, all my eyes are on that market cap. Is it going to hit the 40 trillion? When is it going to hit the 40 trillion?
When is it going to hit? That's the big question.
I'm definitely watching out
and if it hits it before the year runs out, Ladi?
I'm not going to do anything because I know you want to put me on the spot.
Okay.
Thank you so much, Will. All right, then, that was Will giving us the details there from the fixed income market and the FX market. But let's get a check on what's happening in London now. We have Juliana joining us from our London studio. Great to have you, Juliana. Good morning. So we're seeing flash PMI data suggesting that GDP in the UK stagnated over the fourth quarter as a whole. But I guess, at the end of the day, recession was avoided.
Yeah, good morning, Ladi. It's just a couple of days to Christmas. So we're all in a very cheery mood in London, despite the very cold weather. Yes, so there has been some data released. I believe this data was released on Friday, this Purchasing Managers Index data, which is a really good way for UK economists to have a forensic look at the economy. So it looks into construction, manufacturing and services. And surprise, surprise, in December, it appears at the moment to be doing pretty well. The PMI overall data rose from 50.7 in the previous month to what we believe is going to be 51.7. Now, it's a marginal uplift, but of course, with PMI, we know that anything above 50 does show that an economy is expanding, not contracting, which is very, very important, because last week we had GDP data showing that the economy contracted by 0.3% in the month of October. Now, if we look back in early this year, lots of forecasts, including from the IMF and from the OECD, even from the government's own Office for Budget Responsibility, have indicated that this year we're likely to contract or just basically stay above a recession. But apparently it could be a bit more than that. There could be some growth. It is December. We are in the golden quarter. So let's see. I was saying this on your show last week, that we're just a stone's throw away from the main shopping district. And it does appear as if people are out, people are spending. Consumer confidence may appear to be subdued, but we'll just have to wait and see whether or not, retailers and the hospitality, all important services sector, get the growth that this PMI data suggests they may get.
Yeah, we'll definitely be gauging spending there by the average consumer. But what are we expecting? This week is a fresh, brand new week. What are we expecting in the UK economy?
It's a fresh, brand new week. There's lots of data coming out on Friday in terms of retail sales, which is going to be important. I think we're going to get some GDP expectations for November as well, which is important. Car production data. That's all coming out on Friday, the last working day before Christmas, but very, very important Wednesday, which is inflation day, month-on-month inflation for the month of November. And now Rishi Sunak has failed to deliver on many promises, but he did promise in January to halve inflation from what it was then, 11%. It's now at 4.6%. So he's definitely smashed that target, and we're expecting it to fall yet again. I think economists have priced in a 4.3% rise month on month, which is a good thing at this time, because of course lots of people still trying to cram in Christmas present shopping, and with prices falling, you'll have more money to spend in your back pocket. We hope, if it does trickle down.
Hopefully we all have money to spend this Christmas. Thank you so much, Juliana. It was great getting your update. Thank you.
Thank you. Thanks, Laddie.
All right, now let's take a look at other markets. Now we see Bitcoin attempted more gains above $43,000. That's that level, but it still failed to clear that. We're still seeing some strong resistance going on there. If we head to the markets now, we see right there Bitcoin. If we look at how Bitcoin has performed this year in 2023, definitely we've seen quite a good performance there. Investors will be quite happy with what we've seen with Bitcoin. At this point, we see year to date, Bitcoin is up over about 150%. Year to date, we've seen Ethereum not left out, but didn't do as well as Bitcoin this year. Bitcoin over 150%, and a couple of other altcoins that we track. But we're seeing the color of the market there, it's red. This time, looking at Coin 360, we're still seeing Bitcoin that's struggling at this point, 2.05% down. If we look at year-to-date performance of Bitcoin, if you can give me that now, we'll see how Bitcoin has played out this year. This for the price this morning, $41,282, down 2.05%. Ethereum still holding that $2,000 psychological level, down 2.06%. XRP is also down at 60 cents there. Cardano 57 cents. Let's look at the year-to-date performance now. See how the major cryptos we track have performed this year. Talking about Bitcoin and Ethereum. All right, I'm not going to get that right now. All right, let's bring in my guest now, Suman Datta, crypto researcher. Great to have you on the show, Suman.
Good morning, Laddie. I'm very happy to have me here.
Fantastic.
And I
Great
think
to have you.
This year, yeah.
Yeah, so we're seeing Bitcoin up about 150% this year. Do you think a short-term top is in for Bitcoin?
Yeah, it's already up from 16,800 at the start of this year, and right now it is around 41,000. So I think right now this year, at the end of this year, I think 2 weeks remaining, it will hover around 44,000, 43,000. That's what I think. But the top isn't still around the corner. I think by 2024 end, Bitcoin might touch around 100K. That's what I'm expecting from Bitcoin by the end of 2024. But by this year, I think it will be around 43, 44. It will hover around this mark. That's what I think.
Yeah, definitely. We'll be looking if take a look, see if your target actually hits. But how should investors position, for the rest of December? What are you seeing? Do you see investors taking profit, to get some money to put in the pockets for Christmas?
Yeah, investor can do that actually. But the new year will also be coming, and at the start of the new year, the VanEck Bitcoin ETF is still yet to be approved, and that will be the last date for SEC to get through the approval date. And if it gets approved, it will be a bullish indicator for the whole market, not only for Bitcoin. And this can give a major push to the price action, and Bitcoin can even, go per surpass 50,000 K. 50K. So I don't think our investors will cash in right now, because the ETF approval is still around the corner, and is I think is around January 10 or something. So I think the investor will wait for a while, and we'll see how the price plays out.
But looking at this week, this is the week before Christmas. Do you see some downside action, for Bitcoin?
Yeah, I see that. At last day, like yesterday, the Bitcoin has played out. It is down by 2%. It is around 41K. It's down by 2%, 41K. But I think it will be like that, until December, to the whole month of December, and also by New Year Eve, you can say, or by the next, 31st December. I think it will hover around this mark, 43, 44K or 42K, because investors know that if when the Bitcoin ETF is approved, they will get a major boost, and if it gets down from this mark, more investors will pile in, and they'll hold more and more Bitcoin. So I don't think it's the investor understands, they are more mature right now, and they will get in more Bitcoin. So I don't think it will be down that much from here. Maybe around 40K. That would be the lowest mark, I will say.
All right, I guess Suman is not seeing that much downside this week for the crypto market. Thank you so much. That was Suman Data, a crypto researcher. Thank you so much for coming on.
Yeah, thank you, Larry.
All right, that's the show today. Don't forget, you can join us again 1:30 p.m. On Business Incorporated for more updates and developments in the world of business. Also visit our website, www.channelcv.com for more updates. Thank you for watching. I'm Lade Williams. And remember, if you must sell, sell at the top.